My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. We should all by now be familiar with the small V-bottom made back at the turn of March into April. That was the original start of this move higher that we've seen since. However, the latest violent upswing that ultimately caused a monthly key reversal up here was caused by the key reversal, the daily key reversal, on the 22nd of April. This key reversal up broke free of the capping action of the 50% Fibonacci line of the big 2016-2019 move at 133.55, challenged and broke up through the 2020 high at 136.80, and the middle time of the October 2019 to February 2020 move, currently at 138.55. Apart from the exhaustion chart top made from late February at 140.45, there was nothing in the way topside until the congestion between 142.45 and 144.40, which is where most of the action 2 weeks ago was concentrated. The high that week was capped by the August 2017 high at 147.25, which showed its strength by making Thursday 2 weeks ago a key reversal down. The move low was there following, but not that well pressured, as prices basically only went as far as about this same August 2017 high at 147.25 before showing an indecisive doji cross. This was when we saw the pent-up bullish energy finally express itself with last Wednesday's bullish long white Mariposa. Trying to find what had caused the move up there and why of this size, and the only reason I could see was the realization that New York coffee, yes, New York coffee, had made a monthly key reversal up of all things, and there was some delayed buying from investors just to make sure, even though this was evident at least a week before the event actually happened. Anyway, the market continued a little higher until it hit one of the core resistances overhead, the untested but potent upper time of the June to November 2020 bullish shift pitchfork, currently at 152.60. This has halted the rise higher with an unusual and rare bearish hanging man pattern that we've seen the result of today actually. Overall, this pullback has not dented the bullish incentive. We still have below congestion between 142.45 and 144.40, and we still have overhead the upper time, which is after all a bullish pattern, if a slow one. There are no other immediate patterns popping up right now other than one more acute bullish shift pitchfork for the November 2020 to April 2021 action. You see the middle time currently 142.75 and the upper time currently 155.70 acted as support and resistance both times last week. This is one to keep an eye on. London coffee. As I've mentioned many times, we have seen two sideways triangles in this market, one from summer 2020 and the other more recently since mid-March. The earlier one has had a false break higher, the newer one did not, which is why it was so important when seeing the break higher 2 Mondays ago through the individual downtrend to verify that it was a true break higher. Last Tuesday did that. Not for the more recent triangle, that had already been done the week before, but for the larger, older one. I wrote 2 weeks ago, Target X, currently at 15.37, is the preliminary potential target for the large sideways triangle. Target X1, which is off the chart and is still off the chart, currently at 16.32, is the full potential target for the sideways action. All these depend on a continuation of the current break higher out of the sideways triangle, which, as I've said, is not yet confirmed. End of quote. Since then, we've reached Target X last week and halted there. The market is seemingly hesitant about trying higher right now, but I would point out one thing. We could see a fall to the recent 50% Fibonacci line at 13.99 and still remain bullish. That is the scale of this move. So right now, let's concentrate on the immediate supports of the June 2019 high at 15.11, the congestion between 14.77 to 14.84, and the two seemingly still valid reverse head and shoulder necklines from July 2019, currently at 1456 and 1437. There'll be more on those, I think, next time. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.